Good day. Welcome to the Casual Corner. I'm Keyshawn, and this is Melanie, and we are going to be answering your frequently asked questions surrounding life insurance and pensions. So, I've got a question for you. Can I change my beneficiaries at any time?
Absolutely. I like to think of the beneficiary page of your enrollment forms as a living document. Anytime something changes in your life, you get married, you have a kid, you can change that form. It supersedes a will, so it is very important to keep it up to date. For example, if you get married, right, and you put your spouse as your beneficiary on your form, something then happens and you get divorced and you get remarried. Your new spouse is listed in your will as benefiting from your pension, but your ex-wife is still on your pension documents because you didn't update them. Your ex-wife gets your money, and I don't like having to do that. It's very important to keep an eye on it and make sure that anytime something changes in your life, you update it. It's a living document. You can update it as much as you like. I'm not talking about, I had a fight with so-and-so yesterday, so I'm going to take them off my beneficiaries page. The only caveat is it's not something you can do online. So on our platform, you can do everything else. You can change your investment elections, you can look at your performance, but you cannot change that page for a reason. It's a legally binding document. I need a wet signature on it. So if you need to update it, you just come to us, we give you the new form, and we put that on file.
Could you imagine, my kid jumping on my laptop, somehow I've left it open and done wrote his name on all the beneficiary documents and I have no idea. So I guess that security does make sense.
It's also important to tell your beneficiaries that they're your beneficiaries. There's nothing worse than you passing away and nobody knowing what happens to it, right?
Absolutely.
So pensions isn't like life insurance where sometimes it may be worth more if you're dead, right?
Yes. Yeah.
Pensions is a nice, easy way for your family to have quick access to funds in the case of your death. Yeah. So if they know they're your beneficiary, they can call us and say, hey, I'm the beneficiary of my dad's plan. He's just passed away. What do you need from me in order to get access to those funds? Yeah. At Friesenbrook, we do things a little bit differently. As you know, we trade daily. So this has kind of a two-benefit approach. One, it gives you greater flexibility to move with the market if you need to. It also gives your beneficiaries quick and easy access to the cash in the event of your passing. So if they need to cover your funeral or any final expenses, it often only takes 5 to 7 business days to get them funds to cover your funeral.
That's amazing. That's a pretty quick turnaround.
Yeah. Okay, so I have a question for you. So we touched on the importance of beneficiaries when it comes to your pension. Does it function the same for life insurance? If I needed to change a beneficiary, can I?
Yes, it does. You can do it at any time. And we do need the client's signature on a document to confirm that you wish for these changes to take place. So once the document is completed, it overrides the current beneficiary designation and creates a new one based on your new changes.
Yeah, that's the same for us. If you give me a new form, I throw out the old one and we go by what's on the new form.
Absolutely.
Yeah, it's the importance of keeping your policies updated, right?
Absolutely.
Paperwork that nobody really likes. Yeah. Okay, so your turn to ask me one.
So I do just want to retract back a little bit and touch on some things that you mentioned about locked-in pension funds and voluntary pension funds. Can you just explain the difference?
So that's a good question. As a pension provider, we have to lock in 10% of your funds, right? It's legislated. That's what we call your vested amount, for example. So you contribute your 5%, your employer contributes their 5%. That 10% really shouldn't be touched until you retire. Now, we discussed voluntary contributions very quickly. Voluntary contributions are anything in excess of that. So as an employee on a company pension plan, you have the option to contribute up to 95% of your earnings. Wouldn't that be nice, right? If you do that, it goes into kind of this separate little account that's considered voluntary. Voluntary is voluntary is voluntary. If you have pension at another provider and you transfer it to your company account at Friesenbrook, that voluntary amount over there comes over as voluntary. Voluntary you can touch at any time. Preferably not too often, but you can touch it whenever you need to. So a big emergency happens, you need access to those funds. It does cost you a bit. We have to deter you. It will cost $100 to touch it, and you have to take at least $1,000 of your voluntary contributions. Now, those locked-in funds you also can gain access to if you really need to. So the Pension Commission allows regular Bermudians to take a portion of their pension to cover certain things, whether it's mortgage or rental arrears so you don't lose your home. It could be medical costs if you get diagnosed with, God forbid, cancer and you need to go overseas for medical treatment. Education costs for your kids if you're a little bit short on their university fees for the year. And then they've also recently added funeral costs too. So if you want to pay for a close family member's funeral, or you want to pay for your funeral in advance, you apply to the Pension Commission and they will give you access to your locked-in funds outside of your voluntary. You can only do that twice though. Twice in your lifetime, and they have to be 5 years apart because pensions needs time, right? So you have to give it time to recoup whatever you've taken from it.
That makes a lot of sense. And you also want to mitigate people creating false opportunities to withdraw from their
Correct.
end of life goals. That makes a lot of sense.
Brings me to another point. You apply to the Pension Commission, and the Pension Commission, if you have applied for a hardship withdrawal or for one of those reasons, they don't actually pay it out to you. They would pay it out to the school or to your landlord to kind of cover that. So they don't have to worry about people falsely applying.
That makes a lot of sense. And it's good that you mentioned medical expenses, because I know of a term or a feature that exists in life insurance known as an accelerated death benefit, where if a client was told that they are terminally ill, the policy can pay out a portion of death benefits or all, depending on the situation, in an extenuating circumstance, which I think is a very good feature. So it doesn't sound like pensions and life insurance are too much different when it comes to the legacy aspect or the beneficiary aspect. I guess the difference is the value and the time when it comes to what you've contributed versus what you've purchased.
Absolutely. And they work very well together when you're talking about legacy planning.
I agree. And that wraps up our episode today of Casual Corner. You've been speaking with Melanie and Kishan. If you wish to know any more about what we've discussed today, feel free to contact us at any time.